So when I teach people to trend trade, there's a little thing that I do that I thought I would share with you.
Click here to subscribe to our YouTube channel. You'll get instant notification of new videos as they're released.
So yeah, what I'm about to show is really simple, but it's actually quite an effective way of teaching people how to understand roughly what they're doing. And you do it by forcing a decision, basically. So if we go into this market and we back here at 5.6, if we go 1, 2, 3, 4, 5 above, and then we go 1, 2, 3, 4, 5 below, then what I force people to do is I need to say to them, okay, you're going to have to close out one of these positions at some particular point. So which one are you going to close? And as the price moves up and down, what this is teaching people to do is avoid noise, because we start on a very, very wide trend. So you can see we're going to get matched here at 5.2. That's no surprise, because I instinctively can read the market quite well, so I tend to put myself in profitable positions. But you can see on this occasion, you can see that it's actually moved a few ticks in our favor and we've made money. But what I'm trying to force people to do is, if the position goes up or down, I want to show them how noise affects that, but also I want them to say, I think that this position is going to get matched, I think that that position is going to get matched, and then explain why that is the case. But also it shows you the level of risk that you're taking in the market at any one point as well. So we've fixed our risk there to 5 ticks above or below. We actually got the one matched in the profitable direction, but like I said, that's slightly deceptive because I tend to be able to read the markets quite well. But if you put an order above and below, then all of a sudden your focus changes to not getting in on a position, but when to get out. And I think that focusing on when to get out of a position is actually much more important than when to get in, because even if you get in at random, there's a fair chance that you could profit anyway. And therefore part of the skill is deciding when that position has gone wrong, when things start to deteriorate. So you can see on this particular occasion, we got it filled exactly within the range that we wanted, and we got the direction correct as well. But if the price had gone up, there would have been a point at which we would have decided to close that trade. But in fact, we had that position in there already. The only thing that we could have done to not take that closing position would be to have cancelled that order. So by having both positions in there, your judgment and your focus shifts. And you actually shift your focus to avoiding a little bit of noise that you're seeing with the price going up and down, and actually having to make a decision about when the position's gone sour or not. So that's a little trick that I show people when I'm teaching them how to pick up a trend. And over time, what you do is you gradually pull that nearer and nearer to the center of the market, so that people become better and better at picking a specific direction, because then eventually you flip it so that you decide to take an order on one side of the market immediately. But anyway, I just thought I'd show you that. It's a useful little thing to do if you want to practice trend trading.
If you're interested in learning more about BetAngel, its tools and the opportunities they present, then why not visit betangel.com today and download a free trial.